the likes of Sandfire Resources off 16%, Panos 18%, Oz Minerals 18%. And I think we've seen some commentary from some of the big investment banks recently, talk of the time to switch out of yield and into materials. I think within the commodity space, copper is probably one of the most attractive commodities at the moment if you're going to be buying into a single commodity type player. If we look at the demand supply side at the moment, I think the copper sell-off recently has been a little bit overdone. Demand supply looks pretty close to balanced at the moment, and I think the risks really do lie to the upside. If we look at the supply side, there's the good possibility of supply disruptions, then it's not a whole lot of new supply coming online. While looking at demand, China still looks like we're going to see strong demand for copper through this year. We look at Chinese property sales through January, February, they're up 49% year on year, while commodity housing demand, which is a very good indicator of copper demand, is up around 34% year on year over that period. While we look to the US, which is the second largest consumer of copper, the housing market there has been very strong, so that's also a good sign for demand in copper. And looking at evaluation and the stock specifically on the ASX, I think two in particular stand out, one being Panos, the other Sandfire Resources. Panos at the moment is trading on around 10.5 times forward PE. A Sandfire, an even bigger discount to that, around 6.5%. Now that's a discount to both the market and to other material stocks and the major diversified miners. So I think attractive at this level, definitely within the commodity space, one of the more attractive sectors. It's been a rough time for gold miners recently, big share falls, they've all tumbled. St Barbara today announcing they're proposing a $250 million senior secured notes offering, and I think this is in particularly needed for St Barbara. They're going to use the proceeds to pay down their existing $150 million debt facility and also improve their cash position. And I think this is key because if we look at their total debt position at the moment, it's risen to $217 million, while their cash on hand and cash reserves have fallen significantly to only $4 million. Now, this has been due to the acquisition of the Pacific operations of Allied Mining's, which totaled up around $300 million. And this cash and debt position, I think, has become a bit of a concern for St Barbara because they are looking to turn around the Pacific operations within this business. St Barbara's Australian operations over at Leonora and Southern Cross in Western Australia have continued to perform fairly well. But if you look at the Pacific operations they've bought up from Allied Mining, they've struggled, they've continued to struggle, and they're looking to turn this business around. So St Barbara may have found it very difficult to manage their cash flows during this turnaround of the Pacific operations. So I think the fact that a capital raising has come is probably not all that surprising. We're going to have needed to see some significant improvements in terms of their free cash flows to have avoided a capital raising. So I think today this is what's needed for the company.
Okay, Evan, let's talk interest.
In the banks recently has been immediately well supported with the buyback. Any intraday fall of sort of 1, 2, 3 or 4% has been bought back pretty much immediately. And I think that was what's expected today. I think the yield stocks probably a little bit oversold yesterday. So look, some interest in buying coming back today. That jobs figure yesterday, I think, dented the argument towards that yield play in the banks with the expectations of less chances of interest rates coming through. So that's why they were sold off so heavily yesterday. But I think the market today will probably continue to see some weakness in the mining stocks. Interestingly, in the US, the S&P 500 index within 3 points of a new record as well. And I think if it does manage to break through that new record, I think short term we'll see a bit of optimism, but then I can't help but see a bit of a pullback within those markets because after the Dow has now made 10 straight days of gains and 8 straight days of records, that momentum is slowing. We're seeing the gains each day sort of dwindle. They're only sort of 30.3, 0.4% gains, so not a huge amount of momentum left in the US market at the moment. But today I think, yes, the banks will probably lead the way. There's no data released today, so I think we'll certainly be looking towards regional markets, and in particular the Chinese market, which has struggled recently for a bit of direction as well.
Yeah, we've got some FDI data out of China for the month of Feb, actually, on the docket from that economy today. Thanks to you.